Hello everyone, today we're going to be talking about investing on residential real estate. What's the big difference between residential and commercial? I'll go over that a little bit, and also I will explain how the financing works when you purchase a residential properties. And when you are looking into investing on residential properties, I want you to think about these 4 things I'm going to share with you, so that way you make a good decision. In case if you're new to my channel, my name is Simon. I'm an entrepreneur and investor, and also I usually share information about investment, entrepreneurship, and wellness and happiness. Thanks for coming. If you didn't subscribe yet, please do so that way you'll be informed every time I upload a video. Thanks for coming. Let's get to it. We talk about residential real estate investment. There is 2 kind of buyers. One is a homeowner, and 2 is an investment. But at the end of the day, whether you buying the home to live in or to rent it or investment, at the end of the day is what you gonna be spending your money on. You want to find out if you're gonna recoup or make money by the time you sell the property, whether it's 20 years from now or 15 years from now or whenever. So those are the big questions. So I'm going to explain how those are related and how you can take advantage of the situation. So when we talk about home ownership, is basically you buy a single home or you build a single home and you live in it, you enjoy the home while you are residing in that house. Then when you're ready to sell, that's when your investment will pay you off. And usually if you profited on a home you lived in, let's say you purchased the house for $100,000, but after living in it for 20 years, if you end up selling it for $200,000, the profit you make does not really report to the government, to the IRS, so you don't have to worry about taxes. But again, 20 years from now things might change, I don't know, but right now at this point or in the past, the residential home profit capital gain never been taxed. So that as long as you lived on that house 2 years or more, some states might be different, but majority of it is 2 years or more reside in one house you owned, the profit you make is non-taxable. So when you talk about an investment property, residential investment properties are units, 4 units or less. Anything below 4 units is considered as residential, which means it's easier to get it financed. It's easier to get a loan versus buying a multiple units, which is 5 units or more. This always requires a higher deposit on your down payment or the special financing from the bank. So with that reason, usually when you buy 2 units or 3 units or 4 units, especially when you are a first-time home buyer, it's much easier because the loans will be easier to get to. And usually if you go with the government funded loans, it's less down payment, so you take advantage of that. On residential investment, like I said, there is 4 ways you can make your money. One is, of course, you buy the house, you live in it, the area will grow, population increase, the city becomes in demand, and your neighborhood becomes good. Then your value of your home increase, so that way you can profit from your home you purchased. But at the same time, if the area change and it goes totally the other direction, there's a chance of you lose money too. But most of the time, if you really do your study and looked at what the city trend is, most of the time chances are you will gain instead of lose. The second option we talked about is rental properties. Anything above 4 units is considered as commercial, so I'm going to talk about anything below 4 units. So if you buy a 4 unit, 3 units or 2 units, you reside in one, and you rent the other units, you make a little bit of extra money to you, and the same time it will help you pay your mortgages, but at the same time you can claim most of your expenses, like for example your lawn cares or repair on the homes, on the units you did, and anything helps you, so that way you can claim as a rental income and expenses, so it will help you on taxes. But at the same time, when you sell a rental property, let's say whether you lived in it 2 years or 10 years or whatever, anytime you sell your rental property, any profit you make, let's say if you purchased the home for 100,000 and you end up selling it for 150, on that 50,000 you're going to end up paying capital gain taxes. So keep that in mind. So only any rental investment, that's how it works. The fixer uppers, when I say fixer upper resale, is as long as you buy a house and need some work, you move in it and you can fix it while you live there. And if you live there over 2 years, when you sell that, your resident home is considered as home ownership. So that is the same as no taxes. So you can gain a lot of money by fixing it yourself and live in it while you're fixing it. So most people do that, especially on California or any bigger cities. A lot of people take advantage of that because the appreciation of the homes is a lot bigger than Midwest or smaller towns. So a lot of people take advantage of that. The fourth way you can earn money is, which is the new way been trending the past 4 or 5 years, is Airbnb. Like you can rent a room, or if you have 2 family, 3 or 4 family, you can live in one and you can change the other units as Airbnb, or like renting out the rooms. So it will generate you a lot more money, but you'll have a lot more work because you're always continuously cleaning up and fixing the place daily. Basically, you're going to own a hotel. So that's the number 4 way how you can generate income on residential investing. So when you on the buying process of the home, is pretty simple. Number 1, you will just find a bank who will finance you. You will talk to the lender. That will give you an idea up to how much you'll be approved for. Then based on what the bank tell you how much you can get approved, you can make a decision whether to look for a home at that price or below that price. Then you talk to a real estate agent who can help you, who knows the area, and you can tell them what exactly you're looking for, and the agent will start working finding you a home. Number 3 will be to get a pre-approval letter from your bank. You got a pre-approved for, so that way when you find your home, you can submit that contract with that pre-approved letter, so you have a better odd of getting accepted by the seller, to have a strong contract. Number 4 is looking for homes, and the more houses you looked at and study the market, you'll make a quick decision, so that way you move forward. Number 5 is once you write the contract, once you like the home, you can submit an offer. You can negotiate the pricing. If there's some few things you didn't like, maybe you can ask the seller to fix it, or maybe give you a little bit of credit, so once you move in you can fix it. Number 6, you go through the appraisal process. Once you have accepted, once the seller accepts your offer, then the next step will be you will set up an inspection. So you will have a professional to come in and inspect the house, and you will know exactly what needs to be fixed, what needs an attention, what all needs to be done. So that way you move forward, and the bank will do an appraisal to figure out if they are giving you a loan for the house. It gets appraised for. If appraised means if the house value is what you are paying is what the house value is. So that way, if there is a huge difference, let's say for example, if the appraisal comes at 150 but the house you are buying is at 160, then the bank might have some issue with it, so they might ask you we can't finance it, or they might ask you, okay, you need to put down some more money to make this deal work. So once that appraisal, but at the same time the appraisal protects you, because you will know if you're buying a house on the good price or the right price at that time. Then once you do that, you continue on the process, and once the bank finalizes and you have a closing date set up, on that closing date you will get your keys and you move in, and you will continue your life at your new home. That's the basic steps of home buying process. On the financing side, there is different types of mortgages. There is a conventional and government. Under conventional loan, there is a conforming, non-conforming, and jumbo loans. And also on the government side, there is a FHA, VA, and USDA. There is different programs for different situations. So maybe just look into it, so that way you understand and you can see which one will fit you better. In the future videos, I'll explain more what the best financing might fit you and how the process goes in detail, and what kind of advantage you can take on some of the stuff. I'll be bringing you more videos on that. Thanks for coming. As always, make sure you click the like button, so that way YouTube will share this video to more people. And also, if you didn't subscribe yet, please do so. Thanks again. I will catch you on the next video.